So today I'd like to talk about money management when it comes to trading. And it's really important because the only thing you can control in your trading is your position sizing, really. That's the only thing you have 100% control over. You don't have control of the direction of the markets, you don't have control of risk, but you can control your exposure to risk. So I put together a little spreadsheet here to show the effects of different types of position sizing. So over here we have a max loss per trade is at 0.5% of the total account. I'm assuming that you start with an initial account of $10,000. Okay, and as you incur losses in your trading, for instance, let's say you have 6 trades in a row that were losers at 0.5% a trade. So you are down to $9,704. So that is not too bad. At 1%, you're going to be down a little bit more than 5%, almost 6%, if you have 6 losing trades in a row at 1% per trade, and so on and so forth. So at 2%, it's already getting serious. You have more than a 10% loss already, and 3%, you close to 17%, and at 10%, it's almost 50%. So the rule of thumb for traders is never more than 2% to trade, and now you can kind of understand why from the spreadsheet. I would say 2% is the most aggressive you should go as far as trade size, and 1% or 0.5% for beginners at least, or less conservative traders, that would be the best approach. I would stick with about 1%, and if you're just starting out, probably 0.5%. As we go down further here, we get to 10 trades, 10 losing trades in a row. At 0.5% a trade, you're still you lost about 5%. You're still pretty much okay. At 1%, you lost about 10. So that's already pretty serious. It's still recoverable, but for most strategies, you really want to have your max drawdown capped. I would say below 10% to be on the conservative side, somewhere probably around 6% for a strategy. So once you reach 6% max a 6% drawdown, you would stop the trading, stop the strategy, and just reassess the entire strategy and perhaps terminate it at that point. At 2%, you're really at the critical mark at almost 20% drawdown. 20% drawdown is probably the maximum that you can withstand and still have a reasonable chance to recover and at least get back to break even. More than 20%, it's very unlikely that you're actually going to be able to recover because you have less capital to work with, and as we'll see later, to get back to break even is going to require more than 20%. Just more than a 20% gain over time just to get back to break even. But if we want to do some extreme stress testing and see what happens when we have 40 losing trades in a row. So at 0.5%, we're down 20% about in our account, almost. At 1%, we're down about 33% at 6,690. At 2%, we're down more than 50% already. And at 3%, and you can see it's a pretty big disaster, we're down 70%. And at 10%, the account is, we started with 10,000, we're down to $148. This account is completely destroyed. At 1%, for the 1% trade size, being down 33% is pretty serious. You really need a black swan event in your favor, like your long volatility into a flash crash like May 6, 2010. You could recover your position from here, get back to break even. I've actually done that myself, so I know that that's possible. But I think if you're down more than 50%, I think it's almost impossible. I think even a black swan event, um, it's almost impossible, very difficult to get back to break even, which is why you really want to watch your money management and your max drawdown and your position sizing. Okay, let's scroll back up here. So now I wanted to do a quick analysis of how much it takes to get back to break even. So for 6 losing trades in a row at 0.5% per trade, it takes about a 3.5% 3.5% profit to get back to break even. You're actually getting back over here a little bit more than break even. I didn't do it exactly the same for each one. It was too tedious to do that, but close enough. The extra $43 or $54 or whatever it was is for commissions. So you have to make more because of the commissions, and you have to actually make more as a percentage because you're now working with less capital. At 10 losing trades, the break-even profit, so you have to have a profit of 5.5%. Now, it gets steeper for 1% trade sizes, 6.7% profit to get back to break-even. At 6 losing trades in a row, at 10 losing trades in a row, we're now at 11%. There has to be an 11% profit just to get back to break-even. To get back to break even for 2% position sizing, 13.5% profit for 6 losing trades, and 23% profit is needed to get back to break even if you have 10 losing trades at a 2% trade size. At 3%, 6 losing trades, your profit needs to be 20.7% in order to get back to break even. At 10 losing trades, it's 36% profit right now to get back to break even. And you should never do 3%. 3% almost guarantees that your account is going to blow up. At 10%, it's virtual suicide. I just did this for just for illustration purposes, just for fun. So for 6 losing trades, you already lost basically, as you see, you lost basically half your account. You start with 10,000, you're down to 53.14. You need an 89% profit. Okay, we're starting with $5,314. You need an 89% profit based on trading this capital to get back to break even and cover yourself for commissions and everything. At 10 losing trades in a row, at 10% trade size, you would need, okay, sit down for this one, 188% profit to get back to break even. As you can see, if you don't manage your money, you don't manage your position size, it's virtually impossible. Even with a black swan event, to have something like almost, a 200% profit over a short period of time, very unlikely. And in a longer time frame, also, you're going to have adverse events where you're going to be losing additional capital that you can't afford. At 10 trades, we're down to 34.87 from 10,000. So I would say any drawdown over more than 20%, you're really looking, just shut down your trading account and take a year off, because it's very unlikely that you're going to recover from that. Maybe even stop trading altogether. But it should never get to 20%. Rule of thumb is maximum trade size 2%, maximum drawdown for a trading strategy at 6%, and that's of your total capital in your trading account. Obviously, there's other things that need to be taken into account for adequate money management, but this is really the basic. This is the basics. If you have this, you really have a good, solid foundation to start working with. Okay, good luck. That's all for now.